Hello, ladies and gentlemen. Good morning to you, and I'm so excited to welcome you to another session on our morning live. And first of all, I would like to appreciate every single one of you. And for those who are joining us for the first time, you are highly welcome on board. So if you can hear me clearly and you can see my screen, I would appreciate that you give me a feedback in the comment section, stating that the visuals and audios are quite okay for us to continue during the live session. So okay, let me see. All right, so for those who are joining us for the first time, what we simply do here is to do follow-up details on the video which I shared. There was a couple of videos I shared during the course of the weekend as regards the analysis of the instrument that we are going to be monitoring for this week. And in these videos, I talked about the holistic perspective from the daily time frame on how we want to anticipate the new week, and I went as far as going to the daily time frame, scaling down into the 4 hours time frame to explain and identify simple setups that we are going to be using to guide our trading activities for this week. And I would implore that you watch these videos, as it will give you a background knowledge of how we got to this point, because basically on the 1 hour time frame, basically on the live session, I'm only going to be deliberating on the 1 hour time frame. So if you really want to see how we got to this point and understand the ideology behind the decisions we are making here, I would advise that you watch these videos. So with that being said, here, let's dive right into the business for today. I really appreciate some feedback. Please let me know in the comment section if you can actually if the sound quality is good. Let me know, please. I really appreciate that. And okay, with that being said, here, let's dive right into the business for today. So the first thing we are going to be doing before we go into the charts is to look at the economic calendar and the much anticipated inflation data is coming in today. And there is a forecast to hold a steady at 5%, while the core CPI is expected to rise by 5.5%. So the consumer sentiment index is coming in about I think 3 hours from now. We are going to be seeing the event take place, and this data is released by the US Department of Labor Statistics, and it is a measure of price movement by the comparison between the retail prices of a representative shopping baskets of goods and services. And this also gives us an insight into the inflationary status of the US economy, which is still seen to be on the high side, and the data coming in today definitely is going to be having an impact on the interest rate decision in the nearest future. And considering the comment made by one of the Fed Reserve's member yesterday during his speech, Williams, he laid emphasis on the inflation rate in the country and how high it is, and the necessity for the Federal Reserve to continue to increase interest rates if possible, and this might likely cause a bullish traction in the dollar this week or in the nearest future. But we are going to be looking at the chart from a technical standpoint to see what majority in the market are looking forward to, what they are anticipating, which we'll definitely see on the chart as price action. So with that being said, here there are no other high impact events for today besides this CPI data that is coming in later on today. So let's dive right into the chart. Let's see what is really going on in the last 48 hours in the market, and how well the instrument we have been monitoring has been doing, and what we intend to do as we get prepared for the London and the New York session. So going into hold on a second, let's run through this. So the first commodity we are going to be looking at today is the US oil. And on the US oil, we had another buy position during the course of yesterday's trading session. So let's quickly run through how the week started. So what I will be doing here is to bring out my TradingView platform. So I will be sharing with you the commentaries on the US oil commodity and how we took advantage of the trading opportunities that we had this week so far. So at the beginning of the week, we identified this simple setup just right above our key level at the $70 area. So we had a situation here where price action was caught within a consolidation phase, but we saw that the week started on a bullish note actually. So as a result of this, we were anticipating a trend continuation pattern. So we anticipated the breakout of the $72 area to take advantage of that trend continuation to the upside. And as you can see here, we had the privilege of joining that move, and I think we had about over 100 pips on that single move before we begin to see some selling pressure resume just exactly around the resistance line of the descending channel we identified on the 4 hours time frame, which we are also going to be looking into that when we go back into the live chats, especially for those who are not part of the beginning of the week. So we saw this whole situation continue here, and during our live session yesterday, we projected that price action might likely incite a bearish movement. So we anticipated the breakdown of the $72.60 level, and this was exactly what happened. This was yesterday morning, and prior to our live session, we had this whole situation running, and at one point we realized that sellers were losing that momentum as we begin to see buy pressure resume again around the $72 area. And I told us something yesterday that if price action does not break down that $72 area, that we are going to the chance of price action breaking out of that trend line, which happens to be the resistance line of the descending channel, becomes higher. And as you can see here, I illustrated this here that we should be getting ready for the breakout of the $72.60 level. And as you can see, I think about during the later part of the New York session, we had the second buy position for the week triggered at the breakout of the $72.60 level. And during the early hours of today, after monitoring how price action has been reacting after the breakout of the $73.25 level, I was of the opinion that we might likely be seeing a retracement going on at this particular point in time. I'm still thinking that this whole structure is still screaming bullish at this particular point in time. So let's go back into the live chat and let's dissect what is really going on in this market. And for us to understand the current structure on the 1 hour time frame, let us quickly run through the 4 hours time frame, especially for those who were not part of our live session yesterday, so that they can have a background knowledge of what we are talking about here. So when we scale up into the 4 hours time frame, this is what we were able to spot on this chart from an holistic point of view, and it is quite evident that price action has been bearish since the beginning of the month of April. And if we go to as far back as connecting the series of lower highs and lower lows in this market, you will see how price action had consistently evolved into a bearish momentum in this market. Now, when we zoom into the current structure, we saw our first buy position of the week here after the breakout of the $72 level, remember, and we had that position running all the way into that $73.25 area before another wave of selling pressure happened. Now, one interesting thing about the selling pressure we noticed at the $73.25 level during our live session yesterday has something to do with the fact that price action is around the resistance line, a line which has consistently been respected in the last 1 month. And with the situation here, we were saying here yesterday that we might likely be seeing price action continue respecting the trend line one more time to incite a sell-off in this market that might likely lead back into that $70 area before another wave of bullish momentum will happen, or even go to as far as the support line of that descending channel. But instead, what we saw here yesterday, just like we projected during the live session yesterday, if you were with us yesterday, I made mention of this, and I laid much emphasis on it during the live session. I made mention that if price action, hold on a second, I think it was here. So I said if price action finds it difficult to break down the $71 area, and then we want to be looking out for a buying opportunity. And like I showed you earlier, we had the buy stop order placed above that resistance line along the $72.60 level to be part of that bullish move. And as you can see here, we saw the whole bullish momentum bringing price into the structure. And since the later part of yesterday's trading session, we saw how price action had continued to reject that area, now leading into a situation here in the last 12 hours. Now we can see that price action has been going to the downside. And from the look of things right here, it is, for me, I'm of the opinion that this might likely be a retracement of the breakout that happened yesterday, in such a way that price action, after breaking out of this key structure, which happens to be the resistant line of that descending channel, you know, from a technical standpoint, whenever price action breaks out of a key structure like this, we expect that one point in time, price is likely going to be coming back to retest that structure in anticipation of another wave of bullish momentum. So as a result of this, I was not keen in selling at that point, as I'm of the opinion that price action is still probably going through a retracement phase. So at this point in time, we want to see how price action will be reacting to this trend line and the $72 area to decide what our next line of action is going to be for today. So this area along the trend line and the $72 mark, let me highlight it so that you can see what I'm talking about. So this trend line and the $72 mark area, which happens to be an area where we saw buying niche during the course of the New York session yesterday, is going to be our yardstick for trading activity for today. So it now depends on how price action reacts to the structure that will determine if we are going to be buying or selling at this point. So for the sake of simplicity here, let's talk about the expectations of buyers at this particular point in time. So if we are going to be buying the US oil spot for today, what are the things we want to be seeing on this chart that will make us feel comfortable to be in a buy position in this market? So what I'm going to be doing right here is to remain patient in that regard. All of us are going to be remaining patient at this point, as we want to see how price action will react to that structure. And if at any point in time price action gets into the trend line or the $72 area and we begin to see some buy pressure resume around that area on our lower time frame, then at this point we want to be getting ready to buy. As a sign that buyers are resuming again along this area is simply a clue that sellers are finding it difficult to continue that trend to the downside, and at this point this might likely be the culmination of that retracement phase as we get prepared for the bullish move. So what we are going to be looking forward to buy at this point is to see breakouts of that structure, reversal patterns like a double bottom structure, head and shoulder pattern, breakout retest of our neckline on our lower time frame. Then at that point we are good to buy the US oil spot for today. So that's how we are going to be buying the spot. So let's wait and see how price action reacts to the structure. So after taking into consideration the potentials of buyers in this market, we cannot also ignore the possibilities that sellers could still take over this market. And why we have said this is simply because of the fact that price is still trading close to or around the trend line, the resistant line of that descending channel here. So price action is not really far away from this old trend line at this point. And because of this development here, it could still turn out that the breakout we saw yesterday of the $72.60 level and the trend line might likely turn out to be a false breakout. So if this is going to be the case, then we might likely be seeing a bearish momentum. And in addition to these old setup we have here, you will notice that the $73.25 area appears to have been a strong selling niche since the beginning of the week. As both times we had the buy opportunities in this market, we saw that as soon as price got into the zone, we have been seeing selling pressure come in from that area. And for me, this is a sign that sellers are still very strong in this particular market. And if this leads into a situation where price action breaks down the $72 area, then at this point we will be having a reversal pattern on our chart, which will be coming in the form of a double top structure. So for the sake of clarity here, let me give you a visual representation of what I'm talking about. So if we look at this impulsive move that brought us into the resistance line of that descending channel, we saw price action drop into the $72 area. Then we saw the second touch as price is still yet to break out of the previous high, which is a sign that sellers are still very present in this market. And if this whole situation continues in such a way that price action comes into the structure, then at this point we have a beautiful double top structure, which from a technical standpoint is a very strong reversal pattern at this point. But at this point, we are not yet jumping into conclusion, as we still need some confirmation to happen, as this reversal pattern needs to be validated. And the next thing we want to be doing whenever we identify such a simple setup like this is to identify the neckline, which shall be serving as a platform upon which we are going to be selling, and a breakdown of that platform also will be confirming the potency of this reversal pattern. So we have a neckline sitting at the $72 area, which happens to be our resistance line for the week initially before we saw the bullish momentum break out of that structure. So if at any point in time today price action breaks down the $72 area, we want to be having our sell position around that area, and if possible retest of the structure right on our lower time frame will give us more opportunities to add more position to our existing trade. So you can see how the $72 area is going to be serving as a major key determinant of price action for us for today. So let's scale back down into the 1 hour time frame after having this holistic standpoint in this market. So when we scale back down into the 1 hour time frame, let's just do some final touches on this one, and let's anticipate what we are going to be doing for today. So we have the simple setup here. So we have the $72 area, which also shares a confluence with the resistant line of that descending channel, which I shared with you earlier. So like I said, after the breakout of this structure, we might likely see price action come to do a retest of that structure. So if buy pressure resumes above this area, then we have no other choice than to look out for buying opportunity, and a further breakout of the $73.25 level will be welcoming more buy position. So let me put this right here. So we have this area figured out here. So we are looking forward to buying opportunities around this area. Now, if price action breaks down the $72 area, then we would have a mature reversal pattern in our hands. As you can see here, we had this impulsive move to the upside. So we had a touch there. Price came back into the $72 area. So we had a second touch. Price is yet to break out of the previous high. Then if price comes into the structure, we have a double top structure. Then we wait for the validation of this pattern to give us how we are going to be taking advantage of this move. So I want to see a breakdown of the $72 area for us to sell the US oil spot for today. So it's quite a very simple setup that we have here. So let's use the $72 area as our yardstick for trading activity for today. So we have two potentials around this area. So we are looking forward to reversal patterns above the $72 area, like rejections, buyers, sellers finding it difficult to break down the 72. Then we look out for buying opportunity. But if price breaks down the $72 mark, then this confirms the reversal pattern we just identified. Then we might be in for another wave of bearish momentum for the week. So let's see how price action plays out around the structure. But be rest assured that I will be with you right on my TradingView and Telegram platform to give you an update as at when due if market changes or anything significant happens within this current structure, I will be giving you an update on both my public platform. So if you do have any questions regarding what I just explained so far, feel free to drop your inquiries in the comment section, and trust me, I'm willing to be of help in that regard. So let's see how price action plays out from this structure. It could take about 3 hours or even probably a couple of minutes into the CPI data today before we start seeing some huge traction that will give us a trading opportunity. But what I will say here is that we need to be very, very patient for our structures to mature. And in fact, if price action does not even get into the $72 level at any point in time, one thing that is important here is that we are going to be looking out for reversal patterns, that signs that buyers are probably going through the second leg of that breakout of that structure. So these are things we are going to be taking into consideration, and trust me, I will be giving you an update on both my trading view and Telegram platform in that regard. So that is that on the USOil spot. Okay, miraculous meditation, good morning to you. All right, I'll take that as a compliment, and I'm so excited that you find them very, very useful, and thank you for being around. All right, so with that being said here, and in the absence of no questions, I want to assume that we're on the same page. So let's move on to the next instrument for today, which is going to be the GBPUSD. So what has been going on the GBPUSD in the last 48 hours in this market? Well, if you take a holistic view of the 1 hour time frame here, it is quite obvious that price action has been choppy since the beginning of the week, though we had some opportunities at one point, especially at the beginning of the week. So let's quickly run through how the week started for us on the GBPUSD. So we saw the situation here around the 1.26550 area and the 1.26250 level, which happened to be the first structure we were able to capture at the beginning of the week. And this was a simple flat channel, and you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of that structure to give us buy opportunities, or break down the structure to give us selling opportunities. So we had an attempt, we had a buy attempt at the beginning of the week. I think prior to the New York session that day, we had the breakout of the structure, and in fact price action moved about 50 pips, okay, about 16-17 pips in our favor before we saw the bearish move to the downside. And I did told you to move your stop loss as soon as price action moved in our favor, and I hope you did. And if you had done that, you must have been taken out at a worst case scenario of break even. Then we saw price action continue to the downside again at this point, and remember that we had a sell stop order, had a support line here instead, and we saw price break down that structure, trigger the sell position, and that sell position, even if you had missed that opportunity, the market gave us a second chance here before the bullish momentum began, and price action moved about I think 50 pips thereabouts in our favor before this whole bullish momentum began on Tuesday New York session. And since yesterday, we have seen a situation here where price action appeared to be choppy, trapped within a range between the 1.26350 level and the 1.26080 area to give us an insight into the level of indecision in this particular market. And I shared this update this morning on my trading view and Telegram platform. So let's quickly run through what it looked like, what I said here this morning as regards the GBPUSD. And one thing about this old choppy situation that we haven't seen in the last 2 days now in the market is as a result of the majority in the market's anticipation of the CPI data coming in today. And you all know whenever major events are coming in like this, majority key players in the market will step aside from the market, hence we have low liquidity in the market waiting for the data to come in to give us an idea or serve as a catalyst to where price action will be going. And this is evident in the last 48 hours. And at this point, it is very, very important that we remain patient, waiting for our structures to mature in the form of signal of a breakout or retest of this channel. So let's quickly run through how the week started for us here. So we had a sell position triggered on Monday morning. I think Monday's New York session, we had a sell position triggered. We rode the move all the way to the downside before this bullish momentum began. So I made mention here during the New York session yesterday that the sell position has been taken out with a small profit as we return to the status quo. So this simply means that we are back to where we started. We are waiting for price action to either break out of the 1.26250 for buying opportunity or break down again the 1.26080 for selling opportunities. And remember that a breakout of the 1.26250 level will also have broken out of that trend line. Remember, we identified that trend line yesterday where we said it's going to be serving as our yardstick, that as long as price action remains below the trend line, that's red trend line on your screen, we continue to hold on to a bearish bias. But if price action breaks out of the trend line, then at that point we want to be getting ready to buy. And look at what happened here. We saw an attempt. So I already told us that buying pressure increases. So at this point we had a buy stop order above the 1.26250 as price will have broken out of the trend line if price ever gets into that structure. And look at what we had here this morning. We already had a buy position triggered as at this morning, and I made mention, I said buy position triggered as price action breakout retest the trend line, but a final breakout retest of the new structure that I've identified at the 1.23650 level will be a significant buy confirmation for the structure. So I had this new structure identified at the 1.26350 level this morning, and let's go back into the live chat and let me tell you and show you why the structure was actually identified. Now back into the live chat here. So this is the new structure I was mentioning earlier on at the 1.26350 level, as you can see here. So one thing you will observe here is that since the early hours of yesterday, we saw how that area had continued to reject every attempt by the buyers to break out of the structure. Though we have a buy position running at this particular point in time, which is roughly running with about 0 to 1 pips in profit at this point in time. But like I said earlier, I said I will need a breakout, a significant breakout of that 1.26350 level to give me a confirmation that the bullish momentum that we have been witnessing here in the last 48 hours is going to hold and stay. So at this point in time, with a buy position running at this point, remember we have our stop loss somewhere around the 1.26080 level, just right below that area, with about 18 to 19 pips stop loss in that regard. So let's see how price action plays out from this point. I'm looking forward to the breakout of the 1.26350. This is what I'm looking out for. I want to see price action close above the 1.26350 right on our 15 minutes time frame. I want to be seeing this happen, and then look out for retest of structure confirming that buyers are still very strong around this area. The retest could even go to as far as retesting the 1.26250 level, but the most important thing is that we want to continue to see signs that sellers are finding it difficult to break back below the 1.26250. Then at this point we can be in for a buy position. Then another breakout retest of the 1.26550 level will definitely be welcoming more opportunities in this market. And remember, the 1.26550 level is our first resistance line for the week. Remember, that was the area where price action, where selling pressure resumed at the beginning of the week. So that's another key area we are also going to be focusing on for today. So this is how I'm buying the GBPUSD for today. So we are looking forward to price action continue to trade above the 1.26250 level, this level here, to feel comfortable in our buy position in that regard. Now, to make things much more easier, I always like to use my trend lines to help us to be able to feel comfortable in our position. So if we are buying buying, then this trend line will help us to feel comfortable in a buy position, as a breach of the trend line is a gradual sign that price action is going to be inciting a momentum shift. So if we bring out our line chart at this point, I have a trend line here which we can actually use to guide our trading activity. I'm not sure this is mature enough for us to have one, because if I bring back my candle chart right now, okay, I think we can use it. So I will just give this a darker color and make it a little bit more thicker. So I have, let's use the 3 pixel for this one, so that it gives us an emphatic illustration of how important that level is. So we have this trend line right here, so it makes things a little bit more easy for us, and it also helps us to position our stop losses at the right place. So we want to have our stop losses right below the trend line, so that we can give room for price action to breed at this point. So as long as price action remains above this trend line, we shall feel comfortable in our buy position for today. So we are still holding on to a bullish bias here, but anything could actually happen. Now, in as much as we are looking out for buying opportunity in this market, we should also consider the potentials of the sellers too as well. And if you look at this whole structure here since the beginning of the week, you can see that price action has been bearish in this market. And yesterday, remember, we spotted these lower highs here, which gave us this beautiful trend line that you can see on your screen, which we agreed on yesterday that we are going to be using it to guide our trading activity. And it was because of the breakout of this trend line that gave us a sign that we should get ready to buy the GBPUSD at that point. So going into the New York session today and the London session, will this trend line continue to hold for us, as we already have another structure around this area? So let me bring out my line chart and let's see if we could still have that trend line holding structures, or we might be having a new trend line for today. So let's bring this out here, and I will reduce this back to this and give this a red color. Let's go back to our candle chart. Okay, I think we should be having something new to guide our trading activity for today. So we have a new trend line for today, capturing this all lower highs in this market, as you can see here. So though this one is a little bit off it, but it captures the new lower high that we have here that has been going on in the last 6 to 7 hours in this market. So at this point in time, if price action breaks down this trend line, that is this bullish trend line, then we would have no choice than to be getting ready for a selling opportunity. So if we are taking out in a loss on this buy position here, then below the 1.26080 level we should be looking out for selling opportunities. So let me give a visual representation of what we want to be looking out for here. So when price breaks down the trend line, that is the bullish trend line, we want to see some retest of structure happen, giving us signs that sellers are gradually gaining some momentum in this market. And that retest of structure is likely going to be coming in the form of a retest of the bullish trend line that was broken. And if you look at that structure closely, you will see that it also shares a confluence with that bearish trend line that you can see on your screen right now, which makes it a major center of focus to look out for more selling opportunities. If a retest of that level happens, then we want to be in for the bearish move to the downside. Then a further breakdown of the 1.26080 level obviously will be another opportunity to add more position to our existing trade. So these are the things we are going to be using to guide our trading activity for today, but be rest assured that I will be with you in the comment section of both my trading view and Telegram platform to give you an update on what I think will happen if the structure gives us something different from what we talked about here, or probably we have a significant opportunity to take advantage of. I will definitely let you know in the comment section of my public platforms. If you do have any questions regarding what I just explained so far, feel free to let me know in the comment section, and I am willing to be of help in that regard. So with that being said here, let's move on to the next pair, and the next pair we are going to be looking at is the XAUUSD. And on the XAUUSD, it has been quite interesting since the beginning of this week, actually, as we saw our price action appear to be bullish And in that regard, we had the bullish trend line that has been supporting this momentum since the beginning of the week. So this is the trend line we identified at the beginning of the week. And remember, we laid emphasis on how this line is going to be serving as a guide for our trading activity. So what I simply mean by that is, as long as price action remains above that trend line, we want to continue to buy the XAUUSD for this week. But if it breaks down that structure, then at that point we want to be considering that we might be having a momentum shift anytime soon. But so far so good this week. We have been buying the XAUUSD. Remember, we had our first buy position above the $2,025 area. Remember, that was our first resistance line for the week when we had our first buy position. Then we also had another buy position during the New York session. I think prior to the New York session yesterday, we had another buy position here. And if you remember what I said about this whole structure yesterday as regards the setup, I told us here that for those who had missed out on the buy position at the $2,025 area, that we could still look out for more opportunities if price action breaks out of the $2,029.50 level. And I also mentioned here that we want to have a huge stop loss, that is about 60 to 65 pips. If I can remember vividly, I said there is a chance that price action could still come back to retest this trend line before the second wave of that bullish momentum happened. And this was exactly what happened here during the New York session, as we saw how price action came back into the trend line around the $2,025 level to incite another move. And in fact, from that point, price action moved about over 100 pips in our favor before we started seeing the sell pressure resume during the early hours of today. And I do hope you moved your stop loss accordingly to lock in some profit, like I informed us to do on my public platform. And if you had done that, at least you would have made some profit off this move, probably a 50 pips move or 80 pips profit on that one. And if you didn't do that, well, the worst case scenario you could be having here is a break even. Probably you have moved your stop loss to break even at that point. So going into the New York session today, what is going to be our plans? What is our expectations in this market? And one thing I would like to state here is that something interesting has been happening in this market in the last 4 hours, which is something very important that we need to take note of if we are going to ever make a decision on this chart. And that is the fact that in the last 4 hours, we have seen our price action at consistently oscillating just right around both the trend line here and the $2,029.50 $2,030 area in the last 4 to 5 hours, which is a sign for me that there is a whole lot of activities going on there, a lot of indecision happening around that area, and a breakthrough of the structure is likely going to be a very massive move. And one thing about this whole situation here is that we want to position ourselves in such a way that we can catch that move. Now, what are we going to be doing here to make us to catch this opportunity at the right time? Now, remember that we have an high impact event coming up in about 3 to 4 hours from now, and this each traction we're expecting here could coincidentally fall exactly at around that time or prior to that time or just immediately after that event. So what we are going to be doing here is to identify a simple setup just around that $2,030 area to guide our trading activity for today. So I shared here this morning on my public platform on the XAUUSD. Let's run through that quickly before we go into the details of what we are going to be looking at for today. So this is what I said here this morning on the XAUUSD. So I said here, price action takes out the buy position with a small profit size as trading activities return to the entry zone just above the trend line. Note that the trend line continues to serve as our yardstick for trading activities today. So that is a very key point there. The trend line here will continue to serve as our yardstick, and what this simply means, if price action remains above the trend line, we continue to look out for more buying opportunities. But if price action breaks down the trend line, we would have no choice than to get ready to sell at this particular point in time. Now, let's first of all talk about the sell potential in this market. What are the potentials of the sellers in this market? Well, if we go to as far back as Friday, remember we had a crash in the gold price on Friday after the NFP data, which came in very positive. I think over 170,000 positive variance we had there on Friday. Correct me if I'm wrong. So, and as a result of that, we saw how the dollar, a lot of profit taking activity happened, bringing price back into our $2,000 mark, which happens to be our key level for the last couple of months. Now that level has been our key level, and immediately after this bearish impulsive move to the downside, we saw what happened since the beginning of the week. Price action has been finding higher highs and higher lows, respecting that trend line uniformly. And at this point, if we look at this from a technical standpoint, it's looking more like a retracement of that impulse leg. So if we bring out our Fibonacci retracement tool and run it through the previous impulse leg here, you will see that we have price action just right around our golden zone area, just between the 78.6% and the 61.8% of the previous impulse leg, giving us a very beautiful confluence that could incite a trend continuation to the downside. So if that is going to be the case here, then definitely a breakdown retest of the $2,029.50 level should be a sign that will incite the bearish move to the downside. So I want to say price action break down both the trend line and the $2,029.50 level for me to join a bearish move to the downside. So let's keep this in mind. Breakdown retest, we scale down to our 15 minutes time frame, 10 or 5 minutes time frame to look out for the retest of structure, confirming that sellers are gradually gaining the momentum. Then we could actually join that move to the downside. And remember, this structure we have here has a potential of giving us multiple entries, so we can maximize the bearish momentum here if price action ever breaks down and retests that trend line today. So we have structures like the $2,025 area. If it's broken to the downside, we have opportunities to add more position. We have structures like the $2,020 area, and then we also have the $2,015 area, where a breakdown retest of the structures will definitely be giving us opportunities to add more position to our sell position. So let's keep this in mind and get prepared for these opportunities. So that is how we are going to be selling if price action breaks down that trend line today. However, if price action continues to trade above the trend line, then we will have no other choice than to start looking out for buying opportunities in this market. And at this point, I would like to scale down to a much lower time frame, like a 15 minutes time frame. So let me use a new chart in that regard so that we can spot this opportunity here. So the first thing I will do here is to acknowledge that trend line, which we actually did on the 1 hour time frame. So we have the trend line here. Hold on a second. Okay. So let's do some little readjustment here. And then if we zoom into this current structure, you will see that we have a key level around the 2000, and let me see where that falls at. I think the 2033. Yes, the $2,033 area. So we have, I will share with you why that is in a moment. Hold on a second. So let's label this area for the sake of clarity. So we have the 2033. So at this point, I'm looking forward to buying opportunities above that level. And we also have something around the $2,038.50 area, which will be welcoming more buying opportunities rather. So I want to see a break above the structure. But personally, if we look at this structure very well, I'm of the opinion that sellers have a higher chance of getting the edge in this market. Actually, I think sellers have a higher chance, as I've been seeing how buyers have found it very difficult to break out key structures here in the last 3 days in this market. And if it so happens that a breakdown of the trend line happens, then it's going to be a very massive move. So at this point, I want to see right on my lower time frame a breakout retest of the structure. I want to see buy pressure, then I want to join, then a breakout of this area. We have the buy stop order at this point to add more position to our existing trade. So this is how I'm going to be buying for today. I doubt if this is going to be happening today, but if it does happen, let's get prepared to be part of it. But I'm still leaning towards a breakdown of that trend line to be part of a sell move to the downside. So this is how I'm going to be trading the XAUUSD for today. If you have any questions, feel free to let me know right in the comment section. So moving on right now to the last pair for today, which is the USDJPY. And on the USDJPY, we have been witnessing some choppy situations actually, and remember, for the first 2 days of this week, we are yet to open a position, but this morning we had a buy position triggered, and currently we are in a loss at the moment, which I still think that the potentials of buyers is still very strong. So let's quickly run through how the week started and what we actually saw here that made us to buy this pair at this point. So since the beginning of the week, we saw this whole situation figured out here where price action had been choppy. In fact, till this moment it has still been choppy, ranging between the 135.300 and the 135.850 to give us a clue into the level of indecision in this market. And by now we all know why this is all happening, as we have a major event coming up today. Majority are stepping aside from the market, waiting for data coming in to decide what the next line of action will be. And one thing I obviously know is that the inner cycle of those who are going to be releasing the data today will have known this, the information, will have known what the data is going to be, and it's very likely we start seeing their trails in the market prior to the beginning of the event. And this will also help us to be able to time ourselves, position ourselves accordingly to be able to catch that move when it finally happens. So I'm still of the opinion that buyers are still has a tendency in this market. So you all know now that we have a simple flat channel at this point, and from a technical standpoint, you know what we look out for. We want price action to either break out of the resistance line or break down of the support line for trading opportunities. And because of the breakout of the structure, in fact we had the breakout happened during the New York session yesterday, so it was at this point that we had the breakout of this channel. But the most part of yesterday we were trading in a loss around this area. I think a loss of about, how many pips was that, of about 19 pips thereabout. Price has been ranging within that area, and not until this morning we saw another attempt by the buyers to break out of that structure. And in fact, this morning was the first time we had price action close above the 135.300 for this week actually, and this might probably be a sign that a bullish momentum is something that we want to be looking forward to today. So personally, I'm holding on to a bullish bias on this one, and considering the fact that price action is sitting on a very strong demand zone at the 134.700, I'm holding on to a bullish bias. Then another thing I would like to share with you here is the structure we identified on the higher time frame, that is the 4 hours time frame, which we deliberated on at the beginning of the week. So let's quickly run through that quickly and let's see what we are talking about here. So if you look at the structure here on the 4 hours time frame since Friday of I think on the 24th of March, you will see that price action has been bullish in this market, and if we connect the series of higher lows, we have a bullish trend line that is supposed to guide our bullish momentum from a long-term perspective. Then coupled with the trend line here is the demand zone sitting at the 133.500, which also shares a confluence with that trend line. Now we saw the situation here last week. So we have a key level which we identified at the beginning of the week, and it's supposed to be serving as our yardstick to guide trading activity for this week, and that is the 135.00 area. Now look at how important that level is and how it has been a major determinant of price action. So we saw how this level was a strong selling niche in the month of April last month. We saw the breakout of the structure here at the end of last month. We saw the breakdown. Price broke back down the structure and price came back into this area, and since then we have been witnessing this whole choppy situation since the beginning of the week. Then at this point you will agree with me that we are at a critical point just right around the 135.00 area. price has been going up and down around that area, giving us a clue that there is an indecision. Majority are not yet sure of what is going to happen, so we are waiting for a catalyst that will drive price movement. But one important thing here is the fact that price is trading above our key level, and you know how the key level guides us. As long as price remains above our key level, we continue to look out for buying opportunity. And if you look at what we have here, in the last 16 hours, price has been trading above that key level, is about 35 pips away from our key level, and I'm hoping and I think that a breakout of the 135.300 will be what I will be looking forward to today. So I'm holding on to a bullish bias on the USDJPY for today. However, if the contrary happens, obviously we want to also be on standby to catch that move. Now, if a contrary happens at this point, I will not be selling the USDJPY unless price action breaks down the support line of that flat channel, which is the 135.850 level. And now it's not only a breakdown that will give me a confirmation to sell. Remember, we are sitting on a very strong demand zone and price action is looking very bullish from an holistic point of view, so we will need some confirmation that will give us that leverage that sellers are gradually gaining momentum. And what we want to be seeing, you know what we want to look out for. We scale down to our lower time frame, look out for retest of structure to confirm that sellers are actually strong in this market. Then we could actually join the bearish momentum to the downside. And there is a caveat to this whole expectation here. Remember the bullish trend line we identified on the 4 hours time frame. This is it right here. So it now depends on how price action reacts to this trend line that will now determine if we are going to be adding more sell position. So a breakdown of that structure will welcome selling opportunities, while a reversal pattern above that structure will be welcoming buy positions that will incite the next wave of the bullish momentum in this market. So it's on this note I want to be calling it a day here on the USDJPY. I hope I made myself clear, and be rest assured that I will be with you right in the comment section of both my TradingView platform and Telegram platform to give you an update on what I think will be happening at any point in time. Remember, we are having a high impact event coming up in 2-3 hours from now. We want to ensure that all our open positions are locked in. Secure your position, and let's wait for price to mature. Let's wait for market to mature before we want to be joining any potential move today. So on this note, I wish you best of luck, and I look forward to seeing you right in the comment section of both my TradingView platform and Telegram platform as we continue to monitor price action. Do have a wonderful evening, everyone. Bye bye.